Righto, buddy miners, buddy.
Thursday.
Yeah. Shorts. Short, real short.
Short.
Just a little bit.
We're going just a little bit short. We're talking shorts. We're talking tariffs. And when there's a bit of a segment gap, may as well talk about who's going to buy Spartan.
For the 29th
or someone's
time
will.
on our
But
podcast.
fuck, she's bloody flying, and fucking I like talking about shit I've talked about before.
Is that why you're on
just
uranium
easier.
Twitter Spaces again? Maybe?
Yeah, bloody. I've announced to the Twitter world there's a chance I'm going into federal politics to get Australia nuclear. The country needs me, and I think it's my job. Go Australia.
Go Australia. I love that you've got a new must-do on your calendar on Wednesday mornings, and that's join the Wednesday morning uranium Twitter
Wednesday.
Spaces.
That'd be a Thursday, gents.
Yeah, I'm now the
Yeah,
foreign,
true, it's Thursday as well.
foreign uranium correspondent for the Twitter world. So I
love
bloody. I can see myself sucking on a vape in front of Parliament House, telling everyone I'm going to save the country.
You and Patrick should go together.
Me and Patrick from Uranium Twitter.
Yeah.
I love how you've announced there's a chance.
There's a chance. It's
There's a
happening.
chance,
I'm just
okay.
going to wait to see if the punters get behind me. A couple of bloody. We'll do a bit of copper, some Trav's travelled projects. That's a segment.
Yeah.
Yeah, I like it. I
Yeah.
like it. Let's the mining stocks short report. What's going on in the world of weaponised investing?
Yeah, we're always a bit interested in where's the short interest in stocks on ASX. There's a story to every short, there's why is someone taking the other side? And you can be short a stock for a bunch of reasons. Sometimes you've got a negative outlook on the, future performance. Sometimes you're trying to, hedge out your exposure in some other way. So you short this, but you're long something else, and you're trying to reduce your volatility along the way for relatively marginal kind of gain. But there's always a story to a short, and when you see kind of changing dynamics in the short interest of stocks, I think it's worthy of talking about. So I was scanning through Spark this morning, and there are a few mining stock shorts I thought were worth pointing out and discussing, especially relating to those the short interest.
Right, what perked your ears up, Ricardinho?
Well, just starting with the big ones, right? The big global diversified miners. So check this out on Spark. I couldn't believe when I looked at the short interest of some of these names. So MinRes, they're up to 5.5% sold short or short interest of that stock. Maybe unsurprising given there's different views in the market about Onslow. There's different views about balance sheet, different views about what the cash flow from Onslow is going to be and how long it's going to take to get to a certain place. So
Not to mention iron ore, lithium.
yeah, well, iron ore is an interesting one, right? Because they're the pure play iron ore players, like for example, FMG, they were only 1% short. So if you wanted to express, short iron ore via an equity, you think FMG would be the vehicle to do that.
Or
instead
one
of
of the higher, if you think Onslow sits a bit higher on the curve.
Yeah, and that's a good point too, right? Then Rio Tinto was the fascinating one to me, right? So nearly 5% short, and it's climbed pretty steadily the last couple of months, but it just seemed like a very elevated short interest for a stock like Rio Tinto. I get they've got this listing in London, and I think you can explain that that elevated short interest by people playing the arbitrage between the London listing and the Australian one.
Because I think it's cheaper to buy in London. Is that right?
Yeah, and we'd seen
20% cheaper.
We'd spoken about a pod shop. I don't think we'd spoke about it on the air, but maybe offline a month or so ago, that was critiquing Rio and saying just get rid of it, just like BHP did a couple of years ago.
Yeah, so that'd be long London, short Aussie for Rio.
Apparently that's a trade. So, and working the way down. So South 32, 2.5% short. BHP, barely anything at 0.35% short there. So I just found those numbers kind of interesting for the diversifiers. But of course, we like to go lower down the pecking order as the stuff that we talk about. It's a pretty funky feature Adam just rolled out in Spark. I can filter ASX tickers based on commodity, and I think it's pretty useful to just have all of the kind of commodities pop up, especially short interest, for example. So filtering for uranium companies with a greater than 2% short interest, unsurprisingly, Boss Energy is elevated up there. So and they're growing, especially growing since the director selling. So they're now at 4.5% short interest at Boss Energy.
I wonder if that's Duncan.
Right, I said the other day the bloody hedge trade, long Paladin, short Boss, and I'd be already up. So
The demo account's
if
flying.
the Delicacy or Bondi or anyone's listening, you should have given me a pod because you'd be profiting already.
Well, long Paladin, like that's not even expressed in the short interest numbers because they're pretty elevated themselves at 2.8% short interest, DPLO 2.4%. So maybe some people are long Sput, for example, but short the equities as a hedge for relative rebalance. That might explain some of that. But interesting numbers there in uranium world. Now, doing the same in lithium land, pretty consistently, Pilbara Minerals remains 21.4% short. They've been elevated like that for a very long time, and it doesn't seem to be getting lower the longer time goes on. That's a very consensus short trade, and anytime you have like a consensus view, in short world, it's fraught with danger because things can change. So, yeah, I'm just so curious to see how that one plays out. Now, also in lithium, you've got the high cost sort of, troubled producers like Sayona, Core Lithium, who can we still call them a producer? I don't know, but they're both around that 9% mark, short interest. I think it's been tough to actually get borrow on those stocks because they've come out of the index, lower market cap. So that's probably it'd probably be higher on those stocks if you could reasonably get borrow at an appropriate price. And then you've got Liontown. They're an interesting one because they've crept up there. They're now at 10.3% short. Production sort of gets nearer and nearer. Seeing some there's a lot of eyes on Liontown now. I think they had a site visit. They've got doing some videos to show the world how construction and everything's tracking there, and some people are expressing a short position on that particular equity.
Yeah, what else you got? Graphite
stocks. I mean,
jeez, they've had some. They've been well loved in the short world.
Yes,
haven't they?
Not very loved in the long world. So there's
Syrah's been in it forever,
up
in the top.
100%
well,
right.
they're just, they do their semi-annual or annual capital raise and you just feed into it.
Yeah, 100% right.
It's like a reverse dividend sort of thing.
Yeah,
that's it.
Yeah. So there's 3 graphite stocks in this commodity list, thanks to Spark, where you can see they've got greater than 2% short interest. So they're being Syrah, Telga, Renascor. Interesting to me, so Syrah, the short interest dipped when they recently raised capital, as you'd expect. People are short into the capital raise, close it out when in the placement or whatever. But it immediately just bumps straight back up. So, whoever was short the stock, they might have closed it out in the placement, but then they've just fucking re-expressed the same view.
Well, the pool has been recreated. They close, like the pool's obviously consumed, and then they do the capital raise. They close out all the shorts, and the pool resets for all the stock available to borrow, and they fucking start again.
Yeah, well, the read-through is that, whoever's expressing a short view on that, they don't think the capital raise solves the problems. They think that.
Well, it just means they'd be short the whole time.
Yeah.
They just clip the ticket once a year.
Totally, yeah. Found that one kind of interesting, right? So then the others were much lower, around the 3% there in that graphite world. Other notable mining stocks with some short interest, so just kind of looking at the whole kind of metals and mining world. Sandfire, 4.8%. I don't know, perhaps there's some people betting the copper equity sort of overshot fundamentals when you had BHP, Anglo, all the copper stocks ran pretty hard there. But
also with a bit of leverage in the book there, so you're betting against copper and you're picking a highly levered play.
Yeah. So Linus 7.4% short, Arafura 7% short. So there's some rare earth bears out there, I'm guessing. Vulcan 6.2%. So they're regularly ranked pretty high, right? In gold world, you've got Genesis 7.2% short. That's been a mainstay sort of in that since it joined the ASX 200. I think Westgold 9.7%. They've got that deal arb factor going on too, where you short Westgold by Karora to completion, and there's a whatever risk-free in quotation marks return, but it still screens high. Like it feels still feels quite high even for that trade. And then on the energy stock side, Cooper 2.2% short, Beach 3%. So maybe some expecting weights here. To get worse before it gets better. And then Strike Energy pretty high too at 8.2%.
Yeah, I think, God, you'd have to have a set of nuts on you to short things like Liontown, Linus, Arafura and things that Gina are involved in.
Right.
Like, wouldn't you, you'd have to have a pair on you, like just the M&A risk.
Yeah, I guess the question is when's the last time Gina came out with a a cash bid at a substantial premium, because Liontown, I think that people who were short that got their pants kind of handed to them when it came out that Albemarle had these bids, because even if you're pairs trading that, you got your face ripped off you because the M&A just lifted the share price straight away. All of that's kind of unwound now.
Yeah,
but
and to be fair, Gina didn't put a bid in.
No, exactly.
She helped the shorters out, if anything.
Yeah, and Linus, would it make sense for Gina to buy Linus outright, or would she probably just want to see consolidation between? It's pretty hard to run a company like Linus by yourself.
MP.
Yeah.
Who knows? But hey, bloody a lot smarter than me. Tell you what, if Brooks were a public company, there wouldn't be anyone shorting them. That's one thing. I'd put them at 0% short. That'd be Liontown Phase 1 all over again for the shorters. Look at the growth. Who would you short? That'd be the last thing you'd short. If
Mate,
Brooks Group was a public company, that'd be nearly negative shorted.
You rip your face off shorting things that fly, and Brooks literally flies.
Yeah, I'd take it on margin, and just get extra, without even having the stock. You'd be that fucking confident on it,
mate.
Especially after that XCMG deal,
mate.
Deal of the year.
Yeah.
Huge. Yeah.
What do you need Brooks for, right? If
big yellow gear. Holy snap and duck shit! They got some big yellow gear.
They fly you around as well.
They've taken over the WA FIFO industry, the OG Brooks Hire business. Talk about go Australia. Oh, mate, holy snap and duck shit. Fucking maybe we could take Brooks public.
Maybe Qantas buys Brooks. It's so you're long Brooks, you short Qantas.
That's actually not
it's free
bad. Not have a look at the Brooks King Air.
Look at that. Would you bet against that?
Go Australia.
No way.
Right, JD, macro time, global time, EU, China. There's no better one-stop shop than Jonas Benedict Dorling. Take it away.
I am fascinated by this. Super, super fascinated. So a little while ago, we saw the Americans jump up their tariffs on a whole host of goods coming from China. I'm talking EVs, solar cells, semiconductors, batteries, all sorts of critical materials, other metals, components and whatnot. And the numbers were pretty extreme. So lithium-ion batteries, the tariff was up 3.5x. Solar cells up from 25% to 50%. EVs from 25%, that wasn't even competitive at that, it was that hard, up to 100%. It's just enormous, and that's just mentioning a few. And this whole story of protectionism gets more fascinating with the EU coming out last night. They've been investigating the so-called dumping of EVs in the EU from Chinese companies for the last 9 months or so. And now they've come out and put their own tariffs on Chinese EVs, increasing them by at most 38% to a total of 48%. I mean, it's pretty hard to be competitive and sell a product if just off the cuff you're getting marked up almost 50%. And, those rates do differ depending on the make and certain other aspects to it, but that is in the most extreme case, almost 50%. It's huge. And it's not just Chinese EVs. There's groups like Tesla, even BMW, the German maker, Renault. They're getting hit as well for the vehicles that they make in China and ship across. And the challenge that has been presented to the EU is enormous, and it's happened in such a quick time. We'll chuck up a chart now, and you can see just the scale of shipments of these Chinese EVs into the EU from about 2020, 2019 period. They went from next to nothing up to an enormous amount. About a quarter of all the EVs sold in the EU are expected to be Chinese this year. And there is still that low quality perception, that sort of tag that hangs around a lot of Chinese goods. But I wouldn't be surprised to see that changed. Just look how far the country's come and the quality of the products that they produce over the past 20 years. It's pretty phenomenal. So you can see the EU are trying to get on the front foot and protect their industries while they can.
Is it happening with phones? All bloody iPhones and everything getting built in China?
It's not, because I don't know where else you'd go.
Yeah.
I mean, where else would you buy them?
Yeah, true.
That they don't have an industry to protect in that regard. But the
what's the bigger picture here?
The bigger picture is just fascinating. The EU, and not just the EU, this is around the world, but the EU want to get rid of internal combustion engine vehicles by 2035. And that's going to be incredibly hard to achieve if you're increasing the price. Remember, the reason consumers aren't buying the European-made electric vehicles is because of the price, because groups like Volkswagen and so can't produce them as cheap as the Chinese can at the moment. So it's going to be very hard.
3 to 5 times the price, isn't it?
Yeah, I mean, at least sort of 3x. And if you go to the more luxury, which a lot of European car makers are known for, it's many, many multiples. So that change isn't going to happen overnight, obviously, but 2035 will kind of be here in no time, and you need to start seeing serious changes right now. So what I think will happen, and what we've seen in different fields happen already, is a tweaking to the legislation that's been put forward. So we saw Sweden go from 100% renewables in terms of their electric power being produced to low carbon or green energy. And in that circumstance, it means involving nuclear. And I dare say there's going to be a bit of a switcheroo from 100% electric vehicles to lower carbon vehicles or something of that ilk, bringing in hybrids and other sort of vehicles that bring down the overall emissions but don't wreck their industry. I mean, you look at the car making industry in Europe and we're talking about 13 million jobs. It's enormous, and it's a significant portion of GDP as well. So
half of Australia.
Exactly. It's a huge amount.
Mate, so what happens in the long term here?
I think it's pretty concerning for the EU. I mean, we've traveled. You studied economics and stuff, and you back in the day, you'd understand.
Back in the day,
101 protected industries, whether that be via tariffs and subsidies, they only really stay protected and they stay competitive in quotation marks as long as they're sort of supported. And then when the support is pulled out, the downfall can be pretty swift. And at the end of the day, the industries need to maintain their global competitiveness. And German cars have been super competitive for a long time. They've been, leading edge in all sorts of from the luxury all the way down to the commercial mass-made vehicles. But they're going to really have to lift their game if they want to stay in competition with these Chinese makers. And there's a bit of this sort of wording by the EU. They're talking about helping EU makers catch up to the advancements that Chinese companies have had in the past 10 or so years.
I think that's tough, right? Because at the moment, you've got protectionist policies, be it subsidies, be it tariffs or whatever. Like, competition is what drives innovation. In this case, what your European manufacturers, they'll just get used to a different baseline. They'll get used to subsidies. They'll get used to competing against, someone with a handicap. But even though that person with a handicap is still better than them.
That's a huge medium and longer term concern. And then you've also got in the shorter term, the huge concern, which the Germans are well aware of, triggering a trade war at the moment. Of course, cars are just one product. They buy heaps of other things from China. And just look at the poor bloody barley and wine industry in Australia after we just muttered the thoughts that a global pandemic should have some sort of investigation into it. It completely cooked the wine industry here for years.
And the crayfish.
The
fucking cray, good for us. They're cheap as fuck.
Like beef and dairy and various other grains as well. There was heaps. And we saw recently cattle and asphalt, two Chinese battery makers, they canned their plans to build facilities or plants in Germany. And that is seen to be, they didn't obviously say it, but there seems to be some sort of political influence. And who knows, there could be wider sort of repercussions. And then tying it to a resources sort of front, if you're supporting the local car makers in Europe, you'd think you'd go down and look at the raw materials needed, and maybe it should or maybe it could spur some sort of investment in critical raw materials. We know they've got the Critical Raw Materials Act, which they've spoken about for bloody ages and just haven't done anything on. So I'm keen to see a bit more action on that front. If they do want to have European or Western companies building batteries and then going all the way down and building electric vehicles, it's probably about time they stopped talking about it and actually, started putting shovels in the ground.
Yeah.
Fucking love your bloody work, Jay.
Really interesting, mate. Following that one closely. It's a big theme playing out.
Speaking of huge,
big themes, mate, we've had a big theme on Money of Mine because as a segment, I reckon we've recycled about 12 times. And
love
each time,
M&A.
Different energy, different perspectives, but we can't stop talking about Spartan.
I love it. And there's been no M&A, but we've just talked about M&A. So fucking. But
Matty this morning's
cares?
like, we should have a chat about who's going to buy a Spartan again.
Let's get the ding 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 out the way then.
Oh yeah,
I'll
you
still
got
own
a couple of scraps left, JD. Fuck.
I wish it wasn't scraps, but
Fucking
nevertheless.
I told you when I said I wanted to buy it at 58.
Should've listened
If
to you,
anyone
right?
wants to lend me $500,000, I'll fucking then I'll give it back in 10 years or something, fucking with interest. I'd be loaded right now, mate. So gone from in a couple of days, low 70 cents up to high as 84 cents today, as you can see on the Spark chart I got here. Mate, word on the decline, the WhatsApp messages have just been going off. There's a dollar bid incoming.
I just
Probably
want to
not true.
Yeah, let's just
That's a rumour.
let's just not
Word
add some.
on-
But yeah, you're right. That's doing its rounds. But I just think
Yeah.
like it hasn't come from anyone with substance. It's like people say there's this rumor going around. If you heard this rumor,
Yeah,
but
I
no
think
one
it-
knows this.
I think they've
and
all
you-
started it within themselves.
Yeah. And if anyone sort of asks us, are you spreading this rumour? No. If you've heard it on the show, then we're spreading it.
Mate, the first time I heard this rumor was my uncle Steve.
Yeah.
So
And mate,
fucking anyway.
he's in the know. Big Steve.
Anyway,
He hooked us up with Brooks Airways.
yeah,
Fuck, yeah,
Thanks,
he's a deal maker.
He is, mate. He's bloody. We saw him having dinner with the CCP at fucking Diggers.
Maybe he's sorting out some
Anyway.
bloody enriched uranium or something.
Yeah.
Fucking, yeah. Well, he should have Steve on the show one day. Anyway, fucking, right. So if they're 82.5 cents today, and like $1 probably wouldn't even get the deal done. That's only a 21% premium at the moment. That mightn't get the job done. So I've gone up, down, sideways, back and forth on this fucking Spartan journey today. I originally was going to put my cock on the block and say, I think they'll develop it themselves. I don't think Ramelius are going to bid for it. That was my view. But then I'm going to start typing away, and then I'm like, fuck, it just makes so much sense for Ramelius to have this the Spartan assets in their portfolio. But then I'm like, one, are they going to pay up for it? But then two, even if they do want to chuck a bid in, are Spartan even going to accept it? Because with Pepper going off at the moment and things just keep sort of getting better and better for them if they do want to go it alone. And I'm like, so I don't know where I fucking landed, to be honest. But
And they've got some big shareholders, right, who could really
Yeah.
have a lot of sway in a deal getting done.
Yeah.
yeah, so
Yeah.
and the interesting thing to think of is, Tembo have 8.5x their money from that recap.
Yeah.
Like they got 160 odd million shares, so they've made some big bucks.
They
So
have, but they've blown a lot in Strandline, and they've blown a lot. Wow, I don't know what their cost base in True North Copper is, but like
they want to lock this in.
they need
maybe.
they need to offset some
Yeah.
losses elsewhere.
Yeah, so but this has obviously been a fucking good one for them. So they're going to want to obviously get out at some stage, and that 18% stake they've got, it'd be interesting to see where that stake goes.
PE also likes to hold on to money to charge a management fee. One other thing just to bear
And
in
they
mind.
and they're not under pressure to pay it out quickly either. So they might just hold on to it. But so let's just go through how this fucking works. So because where they are at the moment, Spartan could easily, like, they're nearly $1 billion market cap. They could easily raise shitload of equity to fund this whole thing. They could easily take on debt. The ball's in their court at the moment.
Funding options galore. Yeah.
Yeah, but Ramelius, they're, I guess, renowned for only growing at the right price. So, like, to figure they're going to have to do like a $1.2 billion deal, like this is at today's price, whether that's a all script mix of, as we know, they're probably going to have $600 in cash at the end of the year. Could be a mix of cash and script. Whether they're going to bloody pay it up.
I feel like they've paid like decent premiums in the past. I feel like Apollo was a pretty decent premium. I have to check the
But
numbers.
anything at this scale, like this scale is like really above and beyond what they've sort of done before.
They'd be diluting a lot to get a deal done for sure.
So, like, I think roughly, like, say if it was all script at the moment, it'd be around 35% Spartan, 65 Ramelius.
Is that at a dollar? Assuming a dollar.
That's around
just
a
market
buck.
caps.
So
Yeah,
if
okay.
it's more, it'd be fucking
Yeah.
more. But then chuck a bit of cash in. It won't be as obviously the Ramelius ownership of it goes down a bit. But So because the way I'm thinking, like this Dalgaranga mill, the idea of getting the break of day dirt, the Musgrave dirt that Ramelius have got, that's due to go to the Checkers mill, that's right near Dalgaranga, and look, their stage 1 PFS for Musgrave, it was initially for a 5-year project, 500,000 tonne, 65,000 ounces a year, but they've got nearly a 1 million ounces in resource, so potentially a lot more life there. So if Ramelius could have that Q project go out from well exceed 5 years, in line with bloody Never Pepper, like the Dalgaranga project going, that would mean you could refurb that Dalgaranga mill to, instead of 1.3 million tonne per annum, which is what we've hypothesised with. Could be 1.5 now that Pepper's proven up, but they could go. They've got the crushing and the leaching capacity and the big SAG mill to actually have a 2.5 million tonne operation if they wanted to, if they had the extra dirt. So and that'd send that operation to be like a plus 200,000 ounce project, while that like the Musgrave dirt's going there. So it's just fucking way better if you can run it bloody 40% more dirt. That's a fucking lot lower processing cost if they could make that into one big operation. And that, it just makes so much fucking sense for that to happen. But it's whether Ramelius would pay up for it. So if you look at the 10-year outlook that Ramelius put out for Mount Magnet, if you take away the Q dirt, that's going to be a 100 like ranges like sort of 140,000 ounce sort of operation. So like the Dalgaranga operation, if that become in their hands, that's like fucking a big chunk of their portfolio of the ounces that would be coming out of that project if they made it work. So and then there is though then can they then fill the Checkers mill?
Yeah,
but Spartan have the Yalgoo project as well. It's I think it's about
further away.
Yeah, so it's west of Mount Magnet.
Yeah. It's a bit hard to truck it. It's 1.5 grams, that stuff.
Yeah, 1.4 grams, 243,000 ounces. It's 115 k's away.
Yeah,
but Ramelius have trucked dirt a long way before. So there's a bit of a solution. So you fucking tie all that in together, and it's like fuck Ramelius like. Whether they're going to put a bid in over $1 now, because they could have taken it for, or possibly taken it for 60 or 70 cents 6 months ago, if they're going to now pay up that amount of money. But Pepper's started proving up there, so the story has changed. They've drilled down to a friggin' kilometre, and like there's got some life there. But even if Ramelius do put the bid in, I just don't even know if Spartan will take it. Why have 40% of a pro forma instead of having 100% of this pretty bloody good operation?
You don't want to go hostile. Like you want an agreed deal here for deal protection. Like you want to come out with an agreed deal from both boards, and that's by way of scheme of arrangement. There's deal protection in that, as opposed to coming out here with a bloody a hostile approach. I just think you'd be set to fail if you went hostile in this situation. So you need the Spartan board to be on board to get a deal done, which means it's got to be an appropriate premium. And I just looked, so Ramelius actually paid a 50% premium for Spectrum Metals to get Penny back in the day, and it was on VWAPs, it was like 60% premium. I think like the quantum here is so it's like we're in the billions now, so it's like you can't. It'd be harder to bloody, get that away and it be appropriate to your shareholders and everything. But deals get done when you're desperate. And so who needs it the most? Because whoever needs it the most will pay up. And the moment they think someone else is in the door, then someone else comes in, and all those games happen.
I would argue that Ramelius needs it more than Spartan does at the moment. If I was going to put them side by side,
I'm even thinking like which potential acquirer out there needs a growth project the most, right? And Ramelius can pay more because they've got the synergies versus anyone else. But like, you never know. Sometimes there's left field bidders that just like, fuck, I need
pop up.
Yeah, I remember we talked briefly on the GC podcast about Copper Mountain sold their EVA project, for example, right? The logical acquirer of that was MMG because they had the regional synergies right next door. Chuck another circuit on, wouldn't have cost much. And Harmony comes out and pays fucking way more than probably anyone else was prepared to pay because they wanted a copper project to develop, an undeveloped copper project. It was a must for them. So we're willing to pay a stupid number. Sometimes those things happen, and it could happen.
And Regis springs to mind for that. Like someone that needs a fucking, now that McPhillips is on ice a bit, that, like they might need a bloody project.
Yeah, So you're
no synergies, but it's like literally fucking buying it to mine it.
Yeah.
Like can't see Westgale. They look tied up with Karora. That was probably the most logical after Ramelius, just with the regional synergies. It was interesting looking at Mr. Bramwell here on LinkedIn, dressed up as a bloody Spartan warrior, playing a bit of games. I reckon he's like, if I can drive this Spartan price up a bit with a bit of bloody market gossip, Ramelius are going to have to cough up more dough for it. Who knows?
Your guess is as good as mine. That was, mate. That was.
Then he had the Aura comment after they did the Aura. What is it with? Companies, Westgale buying into companies with Karora, Aura Gold. Everyone's like, is he going Aura Bander now?
He's playing mind games.
He's playing mind games. I fucking like it. Getting a bit of Trump a bit. A bit of Elon about him.
Yeah.
Bellevue would be another one, but like
the
only reason why is, to be a good way to sneak in a big capital raise.
Yeah, so their short interest is pretty low now. Bellevue like in the low twos. So I think the market's kind of thinking they're okay, but you never know. Like they're friends.
Mainly, I guess the biggest synergy between Spartan and Bellevue is that they're both verified, so that cuts 2 subscriptions into one. That's an actual synergy. That is a tangible synergy.
That's a genuinely real synergy.
Both verify power users. You know, 2 of the most exciting gold projects in the country. And look, they proved those resources up before VRIFY AI come in. Can you fucking imagine if VRIFY AI was around when they were proving that up, how much bloody gold they'd have?
They would have found pepper a year ago if
they would have found salt as well. Like it's probably yet to be found. And it's like
they would have found pepper without peppering the tenure. It would just been like fucking drill there.
I just don't think it's a coincidence that 2 of the most exciting gold projects in the country use VRIFY.
Well, Aura Gold, they're verified. Westgale gave them $6 million. It's science. Yeah. So easy as that.
Can you do the numbers? No.
Go, Trav.
Mate, I've got a confession on VRIFY, by the way. One of the fund managers with the best track record in Australia asked for an intro to Steve at VRIFY because he's just that impressed by the way we've talked about it, and B, seeing the companies that use it. So
we're now venturing into the VC world, boys.
Yeah, well, I mean, it just goes to show,
probably going to buy VRIFY.
VRIFY is capturing the attention of like elite resources fund managers. Well, fucking mate, use it and you might get some funds.
And they didn't see it from announcements; they saw it on the show. So if you want your company to be bought out for millions, you get in touch and we'll do some ads for you. Yeah. So, Trav, you're Gold Road's best friend. Would they ever look at doing something random like this as a non-controlling interest?
They might look to take a non-controlling joint venture interest in it and let Spartan develop the rest.
Is that a possibility?
Sure, yeah. I mean, I think that was the strategy with De Grey. They sort of bought shares in De Grey a lot earlier. I don't think they bought shares in Spartan. So, yeah.
I guess back on to Ramelius. I can't see Ramelius committing a shitload of cash to this, or if they're going to do it, it'd be big chunk of script, because I would imagine they want to keep that fucking cash in case they have to build their own mill at Rebecca and this Carasue, or do the deal to get Carasue Dam, because until there's a processing solution there, they're bloody stuck. And I think they'll be keeping the cash for that.
They're going to be making like a lot of money at these gold prices, Ramelius, for a couple more quarters still. So I think the cash can replenish to allow flexibility. But you're right, they're going to have growth ambitions, be it organic and also inorganic, to field check as if they can find something else to go in there too.
Well, yeah, and I don't think they're just going to take Spartan just to get that 400,000 ounce title or anything. I think I wouldn't be surprised if they'll sit on the cash, patiently for a Rebecca solution. I'm not sure. I've ended up just going around in circles, end up in the same spot. Something will happen. Spartan will either build it or they'll get bought. That's the bloody answer.
Or, mate, what if they put out dog shit Met and the thing just tanked?
Oh, mate.
So there's a third option too.
Jesus Christ. Fuck, if that happened, after doing so many random segments on it, I'd nearly leave the show.
I think we end the podcast.
Just hang up the mic after that.
Never drinking gin again. Not that I drink gin. Fucking here's left field. But look, the location kind of fucks this one. And I think if they were located differently, I reckon there might be other options. Imagine if instead of Spartan being bought, they use their script to buy something else to lift the feet of Dalgaranga. Though I've come up trumps thinking what could work because there's nothing really close enough. Like Great Boulder, for instance, is 220 k's away, and they're not going to really buy. I can't see them buying Rumble because that's close, but it's all in ultramafic.
Yep.
But I don't think location is not their friend there. There's nothing really makes sense that I can see.
If you think about, so Gascoigne obviously had issues of filling the mill when it was Gascoigne days, and the best thing they could buy was Firefly, which is 1.5 gram dirt, 115 kilometres away. That sort of shows how, I guess, constrained they were to bring in any of these smaller neighbouring deposits to fill that mill back then.
Fucking bloody interesting.
Well,
But Jesus Christ, if that break of day dirt, Musgrave dirt was going there, that'd be a fucking good operation.
Well, mate, Musgrave, I'll tell you something, right? Back in 2021, Musgrave had a substantially larger market cap than Gascoigne, and it 100% should have bought Gascoigne back then.
Yeah.
I mean, like,
Granted, never had
it wasn't
been
discovered.
found.
Yeah, I get all that sort of stuff, but it just like, mate, you as the fucking undeveloped, you know what I mean? Like, you as the project could have gotten a mill for fucking pennies.
Yeah.
Anyway.
Yeah, I remember, but different times.
Back in the day. Oh, I can't wait till we're doing this in 2040 and we can say, I remember back in 2020. Yeah. Like, that'll make us sound, the young punters will be like, these blokes are just gods. Yeah.
We'll keep working towards that, Matty.
We'll be right. What's going on in the bloody MMG world?
Mate, let's go to Africa.
They're an interesting mob.
They are. They're really interesting. I spent a little while looking at them today. So MMG, as we spoke about roughly 6 months ago, bought Comacao from private equity. Now, they'll be known to some of the Aussie punters out there from their Dugald River and Rosebery ownership here in Australia, plus they've got a couple assets sprinkled all around the world. Now, they bought the mine and they spoke at the time. I remember when we sort of analysed the deal, they were speaking a lot about this future multiple because they wanted to envision this time where they've more than doubled and then added another 50% again onto production. Now, they're actually doing that. They have announced they're going to tip in US $700 million into Comacao to lift production from 60,000 tonnes of copper up to 130,000 tonnes of copper, plus 5 million ounces of silver, which I believe is being streamed. So MMG, the entire entity, will be producing a bit under 600,000 tonnes of copper, or copper equivalent rather, per annum.
Yeah.
Now, they want to hit at Comacao that figure by the final quarter of 2027.
How do you know how much of that 600 is copper? Let's just say half.
No, it's more than half.
Yeah.
I literally saw the number just before.
2/3.
Oh, no, it's 70%.
70%.
Yeah.
420,000 tonnes.
So
you're on fire, JD.
Dugald.
No edits there either. Off the top of his head, he's a fucking genius.
Dugald and Rosebery zinc assets. So that's the majority of the other commodity that they pump out.
Yeah.
So they did this rights issue about a week ago to raise US $1.16 billion. It's a huge amount. So they are using a bit over $600 million to pay down an short-term acquisition funding facility that they had. Another $200 to pay down a South American loan. They're the majority owners of Las Bambas. Another $340 million to pay down a revolver, and that's going to get rid of paying $80 million per annum to service that debt. They ripped out that rights issue at a 31% discount to the last close. So, that sounds pretty heavy, but the stock had run quite hard in recent times on the back of copper doing very well and Chinese companies getting a bit more love out there. So they really jumped at that opportunity to de-lever. And now there was another deal they did about a week and a half ago, which flew a bit under the radar, but they sold 45% of Comacao to CNIC. Now, CNIC...
They sound China.
Yes, they are Chinese.
Yes.
Yeah.
Yep.
So they were one of the debt providers to fund that acquisition. Now they've paid $500 million US for 45% of the mine. MMG have just essentially turned right back around and given that $500 right back to them to pay down a facility that they had with them. So there's a chunky US $1 billion loan that was used as part of the acquisition. That now sits at the joint venture level, which is 55% MMG owned and 45% CNIC owned. So MMG were and still are, even after this, a pretty highly indebted company. There's their sales plus the rights issue that they've done are pretty prudent, in my opinion, to de-lever the balance sheet. They've moved from 4 times net debt to EBITDA to 3 times, but that is using a 2023 EBITDA figure, which did assume Comacao ownership for the entirety of that year. Naturally, you'd prefer a forward-looking figure, and I think, forward-looking, things would look quite a bit healthier. Copper has improved quite a bit, and if you're looking at next year, copper cathode production and copper in concentrate production is going to jump up and then up again the following year. Cash flow should follow that, and that'll allow them to sort of significantly de-lever. But there's a lot of similarities between these guys and Sandfire, both pretty indebted companies that done big acquisitions, kind of changing their profile quite substantially in the last few years. And they'll be sort of hoping that they can lift their output, de-lever into a sort of beneficial copper price environment and be quite different companies in 2 or 3 years' time.
Yeah, both Sandfire took on a lot of debt to buy Matza when they did, and then sort of the equity raise as well,
and they both sort of, rights issue, and they both did a raise within a year.
Yeah,
after
12 months
as well.
later, Sandfire had to pay down a lot of their debt with new equity, and but it's like, and both of them, they were sale processes that they kind of both paid top dollar for them, and both of them were, I guess, bets on copper that have now actually look favourable. Like I remember when we talked about this deal, and I was pretty scathing from just a valuation lens.
I listened to it before, yeah.
Yeah.
Not just you. We were, there were certain assumptions baked in that needed to go right.
Yeah, and it might be one of those critiques where I eat my shorts because the world moved in the direction they were betting, which is copper prices higher for longer, and what we've seen to date in 2024 is that's the way the world has moved. Whether it stays that way, I don't know. But it's their MMG share price has run really hard since. If the same asset were to sell again today, it would have sold for more than what they paid for it. So yeah, good, I'm glad it's worked out that way, and good on them.
Yeah, and
I'll
it's
be
cool
happy to eat my shorts.
Yeah, it's cool to talk about increasing copper production, not just these sort of static assets that change in hands again, but money going in the ground to lift production of a metal we need. And you just wonder, like we said back then, is it going to continue just to be Chinese companies that do that? Or is the West actually going to grab the opportunity and do it? Of course, we've seen an increase in production at Kamoa up in the DRC, but that is just as much Chinese owned as it is sort of Western owned. So
would MMG buy Sandfire?
They've got 2 assets both in Botswana. I'm not sure if there would actually be synergies. MMG is 67% owned by China Minmetals trading house, big sort of conglomerate type thing. So I wonder what they'd be thinking, whether they see value. But
bunch of international approvals needed for that sort of thing.
Oh well, it's recorded anyway, so it's fucking. we're in the. I'm in the game. In the game. Next segment. Travs troubled projects. Fucking like this segment.
There were just a couple of kind of announcements that popped up today, and I'm like, don't want to talk about this. I'll group them together and do a segment, but they're worth talking about, and I just think there's a lot of lessons we can take away from the projects that become troubled for whatever reasons. The common theme amongst these is the cap structure. So Galena's Abra project, so the mighty Galena Mining, they came out with this operational update today. Unfortunately, the voluntary administrators were brought in a little while ago. We talked about that, so quartermenters at work there. In today's operational update, we learned that Sternship has been brought on board to run a sale and recapitalisation process.
Gascoigne 2.0.
Well, I think they're on Strandline too. There's a lot of these, at least in Gascoigne, there was a shiny new discovery that you could get, bulk to recap around, but
that was a recapitalisation. I think they'd word that one rather than a
exactly sale. But they might have explored all options. But
no doubt.
This one is we've talked about this company a few times in the past and the trouble that they've had, bringing this mine online. Like the grades, I think, haven't reconciled with what they were expecting. But they also came in at it from the wrong spot as well initially. So. And because there's a substantial debt burden in the capital structure there, this asset is distressed too. So these things, they're not very fun to go through. Like the whole bloody the mine that came online and didn't go to plan, and heaps of debt in the cap structure, and now
and it's creditors left in the midst.
Voluntary administration process, creditors who are antsy about it and all that sort of stuff. These are not fun processes to be part of. They're
can fucking send companies bankrupt, like the creditors.
Creditors aren't guaranteed to get bloody their money back either. Yeah. So there's these processes, they suck. And you look at quarter end, so there was $170 million of debt in the capital structure owing to Taurus. That's in sort of Aussie equivalent. They'll be if it's not making positive cash flow yet, then they'll keep tipping in more throughout this process. You've got a lot of heads to feed in voluntary administration. Quartermenther will take their fair lick. You've got there's whole you've got to make sure unsecured creditors get looked after if they're people you depend on or companies you depend on to actually continue operations. So then you've got your senior lender Taurus, and they're I don't think Taurus is gonna look. They've wanted Sternship to be on this because they're probably going to want 100 cents back on the dollar. That's the minimum outcome for them, is got to get my bloody money back. But you're not guaranteed that in these sorts of processes. You sort of, the market will do whatever the market will do. There'll be a market clearing price for this, and that's probably going to involve a haircut. And I think when you think of Galena's Abra project, I don't know what their cash flow dynamics are like, but they're sort of maybe making money, maybe losing money sometimes, depending on commodity prices, all that sort of stuff. And there's heaps of mines like that out there, but you can't. It's not sustainable for them to have $170 million of debt. In fact, I think those sorts of assets should have no debt. So where does this go? I don't know. I'd love to see the asset come back to market with no debt in the capital structure. Yeah. I hope Taurus doesn't roll debt in it, fucking destroys more equity along the way. I just hope they fucking wipe the slate clean wherever it ends up, and just fucking make sure this asset comes back to market with fucking no debt in the capital structure, because otherwise you just you're asking for trouble again.
Yeah, and God, look at you'd be a fucking mining contractor for love or money. Burncut's the mining contractor there.
Yeah.
Also the contractor at Walloona.
Yeah.
Capricorn Copper.
Yeah.
Telfer has just had the sinkhole, and they've got this as well.
Yeah.
Tough going.
Well, fuck, mate. I hope they've got CRE insurance.
Right. And I think, tough gig.
Tough gig. Hastings is the other one in the category. So they again, financing conundrum that I've spoken about in the past. They started building before the project was fully funded, and because one of the funding sort of levers they drew upon was this convertible with Wyloo that is, out of the money. Funding the rest of the project has been an insurmountable task for Hastings. Of course, I'm talking about the Yangibana Rare Earths project. Now, the update they came to the market with today is that the cost to complete the project is $321 million after spending $153 million to date. So what they say is that this revised cost to complete number is $30 million lower than had previously been flagged in the market. It looks like they've reduced the scope of the EPC contract with the GRES. They've removed stage 2 hydromet, TSF. There's a few other things they've done. Plus, they reckon they found some OPEX savings too. And I'm naturally a bit skeptical of these kinds of savings because
predicted savings.
Predicted savings, and they're also, so it's like I think you can come up with cost or capex cost savings in two ways. One is you might have an A-grade in-house engineering team to optimize the shit out of things, and you realise you can do things more efficiently and still get solid outcomes. And I think another one is if you're struggling to finance the project, you start skimming things out, make the total funding ask a bit more doable because you're under pressure not to actually get the funding to finish the thing. And in the case of Hastings, I can't help but think it's more of the latter than it is the former. So $47 million market cap Hastings have, but they've got $181 million owing to Wailu to be repaid in October 2025, and that's growing every day. Another $321 million they say now is required to complete the project. The capital structure is really limiting Hastings from being an interesting company, unfortunately. I mean, kind of like Galena. If you look at Hastings, without the debt in that cap structure, you could make an investment case, right? If you look at Hastings without the debt in the cap structure, you go, just remove the whole mine to magnet bullshit. I just think that's trash. You're a developer, just concentrate that, or send it to either Eneabba or Kalgoorlie.
Concentrate on the concentrate.
Exactly, yeah. Send it to Eneabba or Kalgoorlie, or make some money doing that. But the current capital structure makes touching the equity like touching a bloody hot stovetop right now. We're just gonna have to watch this one play out, and maybe they'll strum up a financing miracle and pull it all together while keeping the equity intact, or maybe the downside of these sorts of situations like Hastings is we could get another Horizonte Minerals. Remember when I did a case study on them, where the debt kills the developer before construction is even completed and a funding gap remains. Don't know which one it's going to be, but mate, if you're a sicko, you touch the hot stove.
Well, I think if you go back a few years, our fucking things have changed doubly. You'd say they obviously must have been harder to get the equity, hence people like Hastings, Galena, Calidus all had high amounts of debt.
Yeah.
But now, be lucky to get the banks to fucking lend the debt, but looks like the equity, the chase for equity is a lot easier. So I think we're going to see a lot more equity going forward.
TBA, Matty, TBA.
Fucking, yeah, that's what I reckon. I reckon it's right.
Yeah.
What do you reckon, JD?
You mean
You're
not these
better at this
ones,
shit.
not these ones specifically, but just going forward in general?
Well, even why all these operations had a lot of debt. So I'm sure
there's
that's
probably
a function of not being able to raise the capital.
There's also an element of people not wanting to dilute. That's always an element.
Yeah.
I think so.
I think people they're like, I did heaps of work on this. Look at the spreadsheet. It says if I put more debt in it, my NPV per share is higher. But there's, not realistic consideration for the risk factors that could blow that out and require.
Got to pull it off.
Yeah.
People just think you can do the a standard 1/3, 2/3 kind of split.
Yeah. Very good, boys. Fucking every time I think there's not much going on in the morning, we still go for 40, 50 minutes. Fucking,
There's always stuff going on, Matty.
there's always we will find something that may not even be a story, and we'll just make one up.
The world's an interesting place.
The fucking oath it is, JD. The
Bloody oath.
Oh, mate, thanks all the bloody partners. Who we have in the show?
We had
Brooks
VRIFY.
and VRIFY. Jesus Christ, could they merge? I'm into sponsorship M&A at the moment.
Yeah.
There's a ticket to be clipped.
You can
I'll clip
only
it.
be a sponsor if you can potentially merge with another one. So just a bloody filter test there. GetWet Solutions, DSI Underground, Silverstone, CRE Insurance, WA Water Bores, and K-Drill.
And thanks
and
to
how good
Spark.
were those fucking Spark charts?
Hoodaroo.
Brilliant.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.